here with Chaikin Analytics, and I'd like to welcome you to the Ultimate Earnings Season ATM. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. A bit about Sandy. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that now outperforms the S&P 500 and most money managers. Sandy's living proof that you do not have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy's a contributor to Nasdaq.com, where she also hosts webinars on investing. Prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm in a career that spanned over 30 years. She's held senior management roles for Elizabeth Arden, L'Oreal, and the Franklin Mint. She's a member of Elevate, a global professional women's network, and Women in Investing Network of Philadelphia. Now, throughout this presentation, please feel free to submit your questions about the webinar using GoToWebinar. Our chat window is available. Michelle Greenblatt and I will be available to respond to your questions. As a reminder, this webinar is being recorded and a copy will be sent to everyone who has registered for the webinar. Now to get us started, I'll turn it over to Sandy.
Joe, thank you so much, and thank you all for attending today's presentation, particularly to our own Chaikin community, as well as to our partners at Become a Better Trader, Hubert Centers, and Todd Gordon, excuse me, at Trading Analysis. So welcome all, new and returning. So before I get into my presentation, let me just get this little bit of housekeeping out of the way, in that Chaikin is not registered as a broker-dealer or investment advisor, either with the SEC or with any state securities regulatory authority. Chaikin Analytics does not recommend the purchase of any stock or advise on the suitability of any trade or investment. The information presented in this webinar is generic in nature and is not to be construed as an endorsement, recommendation, investment advice, or any offer or solicitation to buy or sell securities of any kind, but solely as information requiring further research as to suitability, accuracy, and appropriateness. Users bear sole responsibility for their own investment research and decisions. Okay, great. Now that I've got that out of the way, I always start with kind of a challenge question. So when you hear earnings and earnings reports, what comes to your mind? Tell me, just if you would, in your chat window, what's the first thing that comes to your mind? Is it like, ooh, wow, opportunity? Or is it, oh, fear, volatility, price corrections, price volatility? What? Just jot down, if you would, in the chat window. Opportunity, caution, gamble, volatility, game is rigged, direction unknown, possible opportunity, volatility. Wow, you guys are typing faster than I can read, but I love it. Lots of volatility, unpredictable, caution, scary. Okay, that seems to be the consensus from many of you who have put your answer in. I appreciate that very much. A number of you do see the opportunity, which is great, and that's what we're going to be talking about today. So we're going to take something that many of you see as a negative and turn it into a positive, because there is a great opportunity to make some profit during earnings season, and earnings season is coming up in a few weeks. It's April 11th. I guess that's actually next week. So what is earnings season? Well, it's a quarterly report that are highly scrutinized by Wall Street analysts and professional investors. And they report on their actual earnings. But the important thing to know here is that they're compared to analysts' estimates. And that is, in turn, what drives the stock prices to these volatile moves that you've all been referencing. So it's not so much how a company did opposed to their last quarter or their last year, but it's how well they're doing compared to analyst estimates. That's the important thing to know, that is what, in fact, drives the volatility following the report. The guidance that is part of a report, an earnings report, can be a real wild card, because there is no way to anticipate what a company guidance will be unless you work in that company and happen to know it from your own information. But there's no system that's going to alert you to what company guidance is, and that can be the real wild card, and that can really cause high highs or low lows. But given that, there is an opportunity to make short-term trading profits. And see it as an opportunity, because there are big moves, as you've all referenced. There are big moves around earnings season. And the anticipation whether a stock will beat or miss estimates is the key to your success. So if you can master that, which is what I'm going to be addressing today, so when you can master that, I should say, then you will be successful at trading around earnings. And we're going to walk through the 4 steps that are key to that trading success. So the strategy is to identify the likelihood, anticipate the likelihood that a stock will beat or miss the analyst estimates. And that's where you can make these outsized profits. So my promise during the next hour is that you're about to discover how to take advantage of volatility and profit. See it as your own ATM machine. Make profits during earnings season and celebrate. I've always been a big proponent of saving for retirement and putting money away into my 401k plan, which is great. But it's not till recently, the last couple of years, that I've really said, hey, life is for the living now, and we need to celebrate some of these nice moments. So we've been taking my profits since I've been investing with stocks in Chaikin since 2012. We've been taking some of these profits out and funding some really great vacations. The top right is a couple of years ago in the summer when Mark and I went to Turkey. We actually went for a wedding in Istanbul, but we added on a week at a resort in Bodrum, which is on the Aegean, which is what you're looking at in the top right. Last summer, we went out to Vail. I'm a big fan of the performing arts, and they have an international performing arts festival in Vail in August, and so we went out for a week for that. And May, next month, we're going to Rome. And these are all on the profits that I've made with the stocks that I'm going to be showing you today. So I'm really, as Joe said in my introduction, I am living proof that you don't have to be a financial expert to make these types of gains and make winning trades. I didn't start investing till a few years ago, and now, as Joe says, I am outperforming the S&P. So why should you listen to me? I mean, there are a million of people out there on television and CNBC and the financial news networks every day telling us what to do. Why listen to Sandy? Well, ironically, I do beat 4 out of 5 pros based on the fact that the Wall Street Journal has put out studies saying that for the last number of years, 4 out of 5 pros have underperformed the S&P 500. So by the sheer nature of my outperforming the S&P, since I've been investing in stocks, I therefore outperform 4 out of 5 pros. Another kind of shocking statistic I just came across recently, this was by McGraw-Hill, a financial survey that they put out. They said for the last 5 years, 84% of large cap managers have failed to beat the S&P. Yikes, and that's mutual funds. Large cap managers of mutual funds. 84% have failed to beat the S&P. So putting your money in an putting your money in a mutual fund may not be, the best answer either. Same was true for actively managed mid-cap and small-cap funds. They also lagged the S&P 500, and we use the S&P 500 as our benchmark. I use that against which I judge myself, and so do most money managers, as you can see here. But on top of that, for a mutual fund, you're paying an expense. You're paying typically 1.5% in expenses a year on top of the reduced performance. So it's kind of a lose-lose. So we're going to walk through today how you can use Chaikin Analytics to give you that directional edge to make profits instead of pain. Just a little bit about my pain, actually, and how I came to be an investor of stocks. I just went ahead one. Oh, excuse me. I started investing when I worked for companies such as Elizabeth Arden and L'Oreal and the Franklin Mint. And they all invested in, they offered investments in mutual funds. So with these mutual funds, I was able to do quite well. I put money into Bill Miller's Value Trust Fund at like Mason, and also at the Magellan Fund, which was one of the best performing mutual funds ever at the time. So I did quite well with my mutual funds, but then as my career got busier and busier, I felt that I needed a professional to really manage this and oversee it, because I lacked confidence. I had no confidence in myself that I could manage this myself. So at the suggestion of a friend, at the recommendation of a friend, I engaged a financial planner, and he took the investments that I had and put them into 8 or 10 mutual funds of his choice. And Mark and I were not together at this point in time. We really didn't get together till right after the whole meltdown. But later he told me that that typically is industry standard. That's typically what money managers do. So that was okay for a while, but then along comes 2008, and we all know what happened then. It was a tremendous fall, and he advised me to hold, not sell, even though I called him many, many times saying, hey, it's not looking pretty here, and it's pretty obvious that everything's going to go down. Shouldn't we just sell? I was calling him as early as September of 2008, and he said, no, just hold on. They'll all come back. And again, because I lacked the confidence to override his decision, I went along with it until my portfolio was down by 40%. And at that point in time, early to 2009, I couldn't take it anymore. So I took the money out of his advisement and opened up a Vanguard account and put it into an S&P 500 account until I could figure out what to do. But one thing I was sure of, and that was that I really needed to take control. This was a real wake-up call. And may I ask you again right now to just put it into your chat window, if you will, if any of you can identify with feeling this way. I mean, I was like devastated. I'd worked for years, 20 years to build that 401k plan, and then to see 40% of it like disappear overnight, it was pretty. I see a lot of you, unfortunately. That's what I did last year. Okay, Bob, we're going to fix that today. Every trade I made, says Brad. So yes, lots of people had similar. Joe lost over 60% with his advisor. Ouch. Nancy, I've gone through multiple cycles though, and it does come back. Yes, it does, but there's no reason we should go through this type of pain. So my mission is to make sure that you all avoid that type of pain, that this does not happen to you because you lack confidence. So my goal is to give you the tools, to give you the confidence to know that you can make your own financial decisions. And if you are using a financial advisor, which is great, we have a lot of financial advisors that use the Chaikin methodology, but you at least need to be involved, which I was not. I totally turned it over to him and let him do it what I felt he knew how to do best. But that obviously wasn't what happened. So one needs to be involved no matter what. Okay, so I resolved to take control. The account has now come back, as Nancy said, threesome and more. And that's only by using what we call the Financial Freedom Fast Track, which is our path to profits, powered by Chaikin Analytics. I'm going to be sharing this with you today, and as the title suggests, we're going to be talking primarily about earnings. But in addition to making short-term profits and earnings, most of the stocks that I buy are with an intermediate view. So I'm going to be sharing that methodology as well. So we'll basically cover first those two strategies so that you can be confident investors and fearless investors instead of fearful investors. So there's 4 steps to profit from earnings. Number one, you've got to know the direction a stock is taking. 2, you've got to identify whether it's a classic bull or a classic bear. Timing is always key. You know, it's easier really to get into a stock than it is to know when to get out of a stock. But we have tools that are going to help you with that. That's during earnings seasons and beyond. And also how to anticipate whether a company is going to beat or miss earnings. So the first one is to know where a stock is headed. Before you do anything in investing, you better have a clear idea of where a stock is headed. Now, our methodology is the Chaikin Power Gauge rating, which is what you're looking at here, which is a very simple, let's say a gas gauge on your car. It's a very simple rating of a stock's potential to outperform the market or underperform the market, looking 3 to 6 months out. And I'll repeat that just because this is really the crux of our methodology and the crux of everything we're going to be talking about in the next 45 minutes. The Power Gauge rating looks at the potential of a stock to out or underperform the market over the next 3 to 6 months. So think of it as a GPS for stocks. It tells you where a stock is headed. Even though it's very simple, there's a lot going on under the surface than you can see. It's basically made up of 4 components, and these are different methodologies that different investors use. For instance, financial metrics are the components, the factors and components that a Warren Buffett type of value investor would look at. Jim Craner, on the other hand, really is interested in earnings performance, so he's more focused on the factors that make up that component. All in all, there are 20 factors that make up this rating. And why is this important? Well, this rating was created by my husband, Mark Chaikin, who's a stock market expert. He'd been on Wall Street for over 40-some years. He had retired after he sold his business to a division of Reuters. And after the whole meltdown, when he and I got together and he could see my despair and see that there were actually billions, literally billions of dollars that were leaving traditional brokerage firms and going into self-managed accounts like Vanguard, like I did, he said, you know, you guys are now managing your money, but you don't have the education or the tools or the know-how to know how to do this. So I said, yeah, you're right. I don't have a clue. I'm just putting it into a S&P 500 fund until I can figure out what to do. So he said, well, you know, I'm coming out of retirement to help individuals like you, Sandy, manage your money and be confident investors, because it's clear you've got to know how to do this yourself, and you've got to have the right tools. So he took the 200 or some factors that the Wall Street pros do use to evaluate a stock's potential, and he knows what those are because he was on Wall Street for 40-some years, creating tools for the pros. So he knew exactly what they used. Down over the course of a couple of years to these 20 factors. And these are the 20 factors that every professional manager will look at daily on a stock that they are following. But rather than go to 20 different sources and search all over the internet and Yahoo Finance and the web for this material, it's all boiled down into one simple rating, which you can break down into a rating on each of these 4 components, or you can continue to break down the 5 factors within each component. And I highlighted here the earnings performance because that's the topic for today's presentation. So these are the 5 factors within the earnings performance category that make up that component. And they, in turn, lead to earnings estimate revisions. You know, and that in turn is what really can tell you how the analysts are viewing a stock before they report, whether they anticipate that is going to out or underperform the market. So let's talk about models for a minute here. James O'Shaughnessy is a famous investor and quantitative analyst, and he feels that models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. I mean, how many of you have traded on emotion? I mean, we all have, right? I see a million yeses for that one because let's face it, you know, we're human beings, so we are swayed by our own emotions and by the news media and what we hear, etc. But, you know, let's really focus and zero in on the model and look at the model and let that be our guide. As I say, that's our GPS for a stock. Now here I've broken down the power gauge rating for a stock. Bruker, this is a stock that I own, has a bullish rating. And you see I've pulled out the earnings component. So I can see for any given stock what these earnings factors are, how they are rated on any given stock. I can do that for any of the 4 components. This is a slide from our desktop application of Chaikin Analytics. It's also available on iPad. Most of the slides I'm going to be showing you today are on the iPad, but this one, just to show you this breakdown here and to show you when they report, is on the desktop. So why should you have confidence in the power gauge rating? Well, we've done back testing and real-time testing since it's been live. And we found that over the course of the last 16 years, if you were to invest only in stocks with a very bullish rating, your portfolio would be up an average of 20% a year. Versus if you only had stocks with neutral ratings, they'd be up 6%. Which pretty much ties with industry average of the S&P 500 over time, averages 7% a year. And if you only invested in very bearish stocks, you'd be down an average of 1% a year over the last 16 years. So this is, as I say, it's done in back testing and real time. And there's all sorts of backup on our website, chaikinanalytics.com, if you want more data on that. But I think this data point is really important in that Nasdaq had asked us a couple of years ago to create indexes which are based on the Chaikin power gauge rating. So what we did is we took 3 of their indexes, overlaid the power gauge rating, filtered out all of the bearish and the neutral rated stocks, left just the bullish ones, and those became the Chaikin Nasdaq indexes. Now those indexes have outperformed their benchmarks by huge returns year after year for the first 2 years that they've been in existence. Based on looking at that, First Trust, which is the largest provider of unit investment trusts, which are like ETFs, came to us saying, wow, you know, this power gauge is really powerful. Will you help us create unit investment trusts for our market? So these are for money managers. So for the first time in December, we launched what we call the Chaikin First Trust Portfolio, low beta growth portfolio, which is the first time money managers and their clients have been able to invest in a given portfolio of stocks based on the power gauge rating. So it's selected 20 stocks, and it as well is outperforming its benchmark and doing remarkably well, even in this volatile market. So in addition, another final proof point is that we are seen and quoted on all of the major financial news networks. Mark is quoted weekly at least once by Evelyn Chung on CNBC, and Barron's Mike Hogan wrote an incredibly favorable review of Chaikin Analytics just a few weeks ago in Barron's. So time. You know, I always say we're in a time-starved economy. I'm not sure if does anyone out there feel they have enough time to get done what they want to in any given day? You know, if you feel like you do, please just put, yeah, haha, says Jeff. Interesting but, question mark, says Dean. Yes, got it, yes. So, yes. As I thought, not too many people feel like they have enough time. Nancy says that's the biggest issue. I agree. So how do you cut through the clutter? Well, that's a big reason to rely on Chaikin Analytics. You know, we really feel like we cut through the clutter, give you the most important information. In a nutshell, you can drill down more if you want, but at least you can go to one place and get everything you need to know to make a decision about whether you want to invest in a certain company or not. So, do you all understand that? Am I clear on the power gauge rating? Did I give a clear explanation of the power gauge? And I ask this because it is really it's the cornerstone of what we're going to be talking about for the next 40-some minutes. So, you know, really need to feel confident that I've relayed it accurately to you all. Okay, great. I see a lot of yeses, so I think I did get that point across. Okay, so a classic bull or a classic bear. So we have clear set criteria for how you identify a classic bull, a stock that's likely to outperform, versus a classic bear. And they need to have these four highlighted parameters consistent for us to consider a stock a classic bull or a classic bear. So let's drill into this a little bit better and look at Atmos Energy. This is another stock that I own. First of all, it has to have a positive power gauge rating, and that is this ribbon on the bottom of the screen here. And you can see since August, Atmos has had a pretty consistent power gauge rating with a little week or so switch over to neutral and right back. Relative strength, this is really important. This is how is this stock doing relative to the S&P 500? If you're not going to buy a stock that is going to outperform the S&P, I mean, why bother to buy it? You might as well go into an S&P 500 index fund and just, you know, stay even with the S&P. Form, you know, which is what I've done, and the examples that I'm showing you, like last year finding American Woodmark and Activision, for instance, that were up over 94% each. You know, those are the gains I'm looking for. I'm not looking to just do average gains of 7% a year. I want to outperform the market. And this indicator here, this green heat map here, is telling me that this stock is outperforming the S&P 500. Let's jump up here to Chaikin money flow. This is an indicator Mark created some 35 years ago on Wall Street. And what this does is this measures institutional money coming in and out of a stock. This is what basically made Mark's, and this indicator is on every technical analysis package sold worldwide. Any charting package that you may subscribe to will have a Chaikin money flow, or CMF as sometimes it's referred to. Why is this important? Well, the institutions, because they trade in such big volumes, they move the markets. You know, I relate this back to when I worked in the cosmetic business and I was marketing designer fragrances. And I say an ounce of perfume at the time now, but say an ounce of perfume was $100 an ounce. Well, whether we sold that ounce in December or in August, you know, it would be $100. And obviously that's not true in the stock market. These prices of the stock price goes all over the place. It zigzags all over the place, and it never goes in a straight line up or a straight line down. And even when it goes up, it's zigzagging and pulling back and going up a bit and pulling back again. The money that institutions put into or take out of a stock have a huge bearing on that. And that is because it's based on stock prices are impacted by supply and demand. So if institutions are buying a stock, there's less of it available because they're scooping it all up. So if there's less inventory, that raises the price. And you can see that here. You can see during these big periods of accumulation, the price is zigging up nicely. I put this yellow arrow here on this buy signal, which are the buy-sell signals we're going to talk about in the next section. But I'll point them out along the way because we have 6 pairs, which are here on this drop-down menu here, of 6 pairs of buy-sell signals indicating the buy from these little green triangles. And I bought this stock back here in early March based on this buy signal. I'd been for a while, and when it triggered this buy signal, I said, great, you know, it had pulled back, and I said, okay, this is a good time for me to get into this stock. So I bought it March 1st at 69, and it's now up in the, you know, $73 category in, what's that, 5 weeks. I'll refer to the earnings impact a little bit later in the presentation. We'll get back to that. Another classic bull has been First Solar. Now it just turned neutral like yesterday. Up till then it had been bullish. Power gauge rating had been bullish since October. Relative strength had been very strong. Look at that nice strong green. Money flow had been very positive until very recently. Now institutions are kind of a little bit taking it out. But let's look at my activity on this stock. And this is a stock that Mark had been recommending in Market Insights. This is a report he puts out every Sunday for our subscribers. And it gives a great commentary on what's happened in the market and where he foresees the market going in the ensuing week. And he also gives very specific stock ideas, one being a detailed analysis of a stock that's either his bullish stock of the week or bearish stock of the week. And he had featured quite a while ago First Solar. I think actually he featured it twice. But this stock was up really nicely in 2015. It was up 48%. Right now it's showing it just dipped, like the last couple of days. It's down 5 for the year, but it also was on Motley Fool's top 10 stocks of 2015. So it shows you how things can change. I bought this stock back in August, you know, when it was bullish. I held on to it. I kept it on my watch list because I wanted to buy more, and I was waiting for the opportune time. This first arrow here in January, this is January 15th, when I got an oversold buy signal. I keep two lists basically, which is what I look at every day. Let me just back up a second, give you that overview. I own 8 or 10 stocks at any given time. And I also keep a watch list, and these are stocks, maybe 30, 40 stocks that I'm watching. And I keep these 2 lists on my platform, Chaikin Analytics platform, and I scroll through them every day, in the morning before the market opens, and then again when the market closes. And this basically consumes about 15 minutes of my time. So that's, you know, we're all, okay? So that's about the time that I spend on my investments every day, because I, like most of you, are working full time and I can't follow the market, you know, minute by minute. So that's how I invest my 15 minutes a day, scrolling through my stock list and also through my watch list. So when I got this pullback here, the stock had gone up to like 72, and then it pulled back, and I got this nice buy signal at 59. So I bought some, and then I bought more. You know, I saw it go back up again, and then I saw it have this big pullback here, back down to 62. About a month later, February 19th. So I bought more, knowing that they were reporting earnings the next week, and because they had all this green and a positive earnings outlook, I felt, boy, this stock is very likely to exceed analyst estimates. So I'm going to take a second position before they report and take advantage of that earnings spike, which is exactly what happened. So I bought it down here. They reported a week later. The stock spiked up 16% the day after they reported. And I point this out because January and February, if you recall, were the 2 incredibly volatile periods on Wall Street in our history, I think. And they were, you know, everyone was talking about a bear market and doom and gloom, and is this another 2008? And I mean, there's all sorts of hand-wringing and tension and stress and negativity in the news media, day in and day out. But I point this out because this system, looking at all this green, gave me the conviction to say, hey, this stock has great potential, and I'm going to buy it. And not only did I buy it once in January, I bought it twice in February. Now it spiked up here after it reported earnings, and I did take some profit here. I sold some recently at 72, and it hit this upper volatility band. And now, as I say, the stock has turned to neutral, power gauge rating. And what's happened is it's pulled back right in here after they had an analyst meeting. It was just a couple of days ago. And First Solar failed to issue fiscal 2017 guidance. They said that they lacked clarity about next year. And if there's one thing the market doesn't like, it's uncertainty. So, you know, the stock pulled back 7%. What's going to happen when they report on May 5th? I don't know. I mean, I said in the early on, guidance is the wild card. So who knows what's going to happen with that. But, you know, that's where we stand right now. Now, one of our subscribers, Rich, said that he bought Solar City, which is a stock in the same industry group as First Solar. And after he subscribed to Chaikin, he saw that Chaikin rated it poorly, but he'd already seen it go down. So he said if he had had Chaikin, he would have bought for Solar City. And you can see by this chart here and all this red, this is not a stock you want to be in. This is, you know, this is not good. And you get these sell signals along the way. This one, particularly right before they reported earnings, and stock dropped by about 50%. So, you know, this is powerful stuff, but how do you find it? Okay, so how do you find these stock ideas? How do you find the First Solars, the Brukers, the ATOs, the Atmos Energies? Well, we make it pretty easy. We actually kind of do it for you by introducing this stock screener not too long ago, just a few months ago. And you can plug in your criteria. Now for this, because we're talking about earnings, I plugged in that I'm looking for stocks in strong industry, and we start with a universe of 3,000 from the Russell 3000. I want the power gauge to be bullish. Then I put in those earnings components, you know, 3 of those 5 that because we're limited to 3. I want those all to be strong. And I also want money flow to be strong, and I want relative strength to be strong. So you can see I started out with the universe of 3,000. In seconds, I got down to a universe of 50. And these are the 5, I'm sorry. And these are the 5 stocks. I can then put these into my workstation with a click, and then I can scroll through them. So what I've done is I just pulled up the first one, just so you can get a look at what this looks like. So this is the first stock, NCI Building Systems. You can see it has a very bullish rating. We can see the reporting in June. This is this new earnings feature that we very recently introduced into Chaikin. By this drop-down menu, you can get a little bit more detail on it, in that it's saying there's a very bullish earnings surprise factor in this. They reported their second quarter a year ago, and it was this. There's a surprise that's very bullish. They last reported March of 08. And if you click on these little EPS things, it'll actually tell you whether they disappointed. And they'll give you the numbers. And the EPS will be red if they disappointed, green if they beat. So you can very quickly see when they're reporting. So I mean, I just put this back on my watch list now, saying this is an interesting stock. I know they're reporting June 7th. So I'm going to just watch this. You know, there's an awful lot of solid green in here. Let me explain this overbought, oversold indicator, because this really helps with timing. As I said earlier, stock zigzags up and down. You know, it doesn't go in a straight line. This straight line is the 200-day moving average. That's not reality. You know, this is the reality. And when a stock, an overbought condition is in a stock, that's typically at its high of a zigzag, and you want to wait for it to pull back, because that typically brings the price down. And inevitably, the price will come back down. You know, it will never go straight up. So think when you look at this overbought, oversold, you want to buy a stock when it's down here. You want to sell a stock when it's up here. And you can see very clearly how it equates to the rhythm of the stock. So let's move on to classic bears, you know, because this is to protect your portfolio. You want to identify a classic bear before it attacks you. And that's by identifying basically the same features as a classic bull, but in reverse. So let's look at LinkedIn. Okay, LinkedIn, it's down 49% year to date. I hope none of you own LinkedIn. But let's look at the chart. Very bearish power gauge rating now, and most of the year, with a month or so swing into neutral, but then back to bearish. Relative strength, this stock is underperforming the S&P 500. And for the most part, there's been money coming out of this stock. And you've got a sell signal. This is one of the 6 pairs of sell signals. There have been other dotted, but I can only show one at a time. But This reversal sell signal actually triggered right before they reported earnings, and the stock went from 200 to 100. Ouch. Yeah, I hope none of you were in LinkedIn. If you were a subscriber to Chaikin, you would have gotten out of this stock before they reported earnings. By looking at this chart, in a second, you would have made that deduction. Is that clear? Let me just pause here for a minute. Ask you if you'll just put into your chat window if you can clearly see how this is a stock you would want to be out of or avoid. Okay, Paul's asking me if I can go back to the screening criteria. There's a lot of factors that you can overlay on the screening criteria. When you subscribe to Chaikin, Joe and Michelle will go over that, and you'll have a small group session to actually explain how to use the screener. And if you need to find out a little bit more personalized attention, how you integrate that with your own trading methodology, they will set up a one-on-one call with you. But basically, you can put in any of a number of factors and screen, filter out those that don't meet that criteria. And you can do it any which way to Sunday. You can do it on the S&P 500 list. You can do it on your watch list. You can do it on the list that shows your stocks. You could do it in any number of ways. Okay, so it looks like people are pretty clear. Wouldn't I short the stock? Sure, yeah. This methodology is really helpful for shorting or putting a put option on. And we do have an options overlay too, which we don't have time to get into today, but that's, again, another session that Joe will set up with you when you subscribe. What do I use for my sell signals? I use them all. There's 6 sell signals that trigger. And whenever one triggers on a stock that I own, I take it very seriously. Does the system give future price targets? No. System different than free charts? Yeah, this is a subscription product. You can only get what you're looking at now when you subscribe to Chaikin Analytics. So Michelle and Joe, I'm helping you out a little bit on answering some of these questions. But getting back to my original question of could you see the difference on the bulls and the bears, I got a lot of yeses and that it was very clear. So that's terrific. So let's look at another example of a classic bull. And this is interesting because this stock, Netflix, was up 135% in 2015. So, just because things were good last year doesn't mean they're good now. The old kind of psychology of buy and hold is not really relevant in today's economy. Buy and hold, you'd be screwed because you would have seen your profits disappear, and this stock is down now 8% on the year, which is really unfortunate. But that's why you've got to monitor your stocks and make adjustments as things change. So this stock is now at 104. It's actually down 22% from the peak back in December up here. And again, this was an earnings call that Mark put out saying, hey, be on alert. Netflix is reporting. We've got this sell signal here that triggered, 4 days before they reported at 108. They reported, and the stock dropped 26% to 80. You can see it down here. So, that's not a pretty picture if you were sitting on this stock. But looking at this, you've got a bearish power gauge rating. The relative strength, it looks like it turned after they reported, so that may not have helped you. But certainly the money flow was negative, and you get this sell signal here. So with those 3 things telling you, hey, and Mark pointing this out in his market insights, you would have had ample warning to get out of this stock, or again, put a put option on it and profit on the way down instead of take pain. So the power gauge and the relative strength are still bearish, even though the money flow is now positive. But that wouldn't be enough for me to be comfortable getting into this stock in any form whatsoever. So we get a lot of testimonials. Joe gets them practically daily from our subscribers. And Jim here says that as of yesterday, he's a recent subscriber. He only subscribed in January. And he's made enough to pay for the annual subscription, so the rest of the year is just gravy. So he's a small-time investor, just started trading actively last year. Year to date, I'm up over 54%. That was in January when the market was down. That in itself would be a great year, but it's only been 5 weeks. So you know, these are real stories. Here's an email that Joe got from Eric about a month ago. He's been using Chaikin for several weeks. He can quickly and clearly see when to go long or short. He's already closed out 2 trades for gains of 70% and 115%. Over the years, I've tried different software packages and programs. Chaikin is by far the most straightforward analysis product I've ever used. So thank you, Eric. And those of you who are subscribers who are on, feel free to type in your testimonials, and Michelle and Joe will call them out while we're on the webinar. So let's move on to number 3, knowing when to sell and know when to buy. I've been pointing out the buy-sell signals, these little triangles, as I've gone through the stock chart examples. But how do you identify them and know when they're going to trigger? Well, we have an overlay that we call the alerts view, which is, this is again from the iPad. And this is my watch list. I told you I keep 2 lists, one of my stocks, one of my watch lists. I click on this little bell every morning, and it overlays the signals, buy, sell signals, as well as other alerts that can affect the price of the stock, like a rating turning bullish. So for instance, I took this screenshot back from February 16th, about 6 weeks ago, just to show you how powerful this can be. But Bruker, their rating just turned bullish then. It crossed over its long-term trend line, that's that 200-day moving average, the orange line, and it triggered a buy signal. Now this was, 2016 was about, what, 7 weeks ago. Stock was 23. And I bought this stock based on this information that you're looking at right here. I bought it at 23, even though they had already reported earnings. I think I have Bruker. Let me just go to the next slide while I'm on it here. Yeah, even though they had just reported earnings, there was a buy signal in January before they reported, but I didn't take action until I saw that one that I just showed you on February 16th, which is here. And that was after it had reported earnings. So it had already gone up some, but that was okay by me because everything had turned green and this money flow was now really strong. So I got into the stock right around in here at 23. And the stock is now, as you can see, up to 29. So just since 216, when this buy signal triggered, this stock has gone up 26%, and I think the market in the same time frame has been up about 9%. So this is more than doubled what the market is doing. But let me go back to Ruth here, because this was the other example as well. This stock also triggered a buy signal that same day, February 16th, and it's spiked up after it reported earnings as well. And it's up 12%. So the signals can be really powerful. Do you have to use them that exact day? Well, no, not really. But you combine that with your earnings overlay, and you've got a powerful set of criteria to make a pretty informed decision on whether that stock is likely to outperform and beat earnings estimates. So speaking of earnings, let's move on to beating or missing earnings. There are new functionality that we've recently added to our system, our workstation, that allows you to overlay this earnings view on any stock. So on the chart of any stock on your desktop workstation, you'll see when that stock is reporting. So this is a stock that I own, ETR, and I know they're reporting now on April 26th. So, you know, I've made a note of that. And here's the detail. You know, it's very bullish. They last reported in February. And we'll go to a detail now. Overlaying when they reported and whether they beat or disappointed. But the last one, they beat. I bought this initially back in December when it had just turned positive with positive relative strength and positive money flow. And I bought it back in here at around, I think it was 69. And then I kept it on my watch list because everything was green and it looked really promising. And the utility, were really, it was like the #1 industry group out of 65 industry groups. And one of our 5 steps to successful investing is invest in strong stocks and strong industry groups. So, that's another one of my screener overlays that I do. I look for strong stocks and strong industry groups, and this one had popped up numerous times, and I had it on my watch list because of that. So I bought this stock again on the 17th of February at this buy signal here, when a money flow buy signal triggered at 71, and that was right the day before they were reporting earnings. And I knew that because, I get this little alert here that they're reporting, you've got a buy signal. And so I said, boy, I'm going to buy more because, with all this green, I think this stock is going to exceed analyst estimates, and they did. So they reported it spiked up. I sold some the day after at 74, just to take some profit. I got like a 4% profit, and I kept some in, and it's now up around 77 or so. So it's up 14% year to date. In a pretty difficult market. So that's a clear-cut example of how I use the earnings overlay along with the alerts view in tandem to help guide me when to make these types of decisions. Now, American Woodmark is a great example of when to buy, when to sell, and when to take advantage of earnings. So I like to use this example because it combines so much of our methodology in one stock. So starting back a year ago, April, I bought this stock back here. I had it on my watch list. It is in the home furnishings and appliance industry group. That was like one of the top 3 of 65 industry groups back a year ago. I think it is still pretty strong today. But I had this on my watch list. I was just waiting for the right time to buy it. And I got a oversold buy signal here back April of last year. So I bought the stock at 54, and I held it. They reported earnings. They popped up, which was great. I held on to it. And then they reported a second time, you can see here. And then they really spiked up. So I took the profit. I spiked up, and I took the profit at 67. Right on the open after they reported earnings, and I realized a 25% profit in those 3 months, or $3,800. And this is like the money that I stash away and we use to take us to Vail or Istanbul or our upcoming trip to Rome. I mean, this is these are these nice little packages that you can make and stash it away and celebrate. But after I sold it, I thought, I still really like this stock. Went through a little bit of consolidation here when some money came out of it. But when the money flow started to be positive again, I put it back on my list. And I waited for the right time to get in. And I got this alert here in November saying, hey, there's another oversold buy. And that was at 72. And again, I knew they were reporting earnings. I knew they were reporting earnings in like 10 days from then. So I said, well, wow, I'm going to buy this because I bet this stock is going to exceed analyst expectations. And they, in fact, did, which you can see by this 20% spike right in here. And then I sold it up here and took my profit. Since then, you can see the money flow turned negative, and you can see what happened after that. Once that turned negative, then relative strength turned, then power gauge rating turned neutral, And, you know, the stock went in a decline and it went all the way down to like 57. So that's why it's so important to know when to get out of a stock. It's just as important as when to get into a stock. And some of the criteria that I use are a spike after earnings. These dotted bands here are what we call volatility bands. So when it reaches that upper band or even exceeds it, that's a good time to take your profit and be happy. Likewise, if you hadn't sold by then, when it crosses under that orange line, that 200-day moving average, or under this lower volatility band, that's also a flag saying, hey, you might want to consider selling the stock now. And that would have been a really good decision because, as you can see, it's gone down. Now it's coming back, and it just recently came back to a bullish, and it's now at 74. So that's okay. But I put that money to work. You know, I put it into Atmos Energy and ETR and some of these other stocks, Bruker, some of these other stocks we've been talking about. You know, rather than ride a stock down and ride it up again, put that, you know, take those 4 months and put that money into something where you're going to see a gain. Likewise, earnings, you know, can work against you or work for you if you put a put option on it, and that's exactly what Mark talked about in his market insights with Amazon, in addition to with Netflix, which was another example we showed you. So Amazon was another, you know, winning stock in 2015. It was up 118%, but year to date it's down 11. It shows you how quickly things can change. Power gauge turned bearish here in early January at 619. And a week later, Mark featured it in his market insights as his bearish stock of the week. And to quote, he said, put options on stocks like Amazon and Netflix are attractive. So a lot of our subscribers listened and did exactly that. And then you get this sell signal here, like a week later, January 27th, before they reported earnings. And you can see by the negative EPS and the drop in the price that the stock dropped over 125 points after they reported earnings. So, you know, that's something you can take advantage of if you trade options, or, you know, if you're long the stock, would give you the warning to get out of it between Mark's alert and the sell signal, you know, and the activity looking at this chart with the bearish rating and bearish money flow. Our subscribers would have known to get out of this. It's now coming back, but it just triggered, again, an overbought sell signal on it today. But the power gauge is still negative. Relative strength is still negative. Money flow is a little bit better. But is this a stock anyone in the audience thinks they should buy now and long because it's trending up? Does anyone have confidence that this is a stock you'd want to own right now and hold for the intermediate or long term? If you'll just, yeah, a lot of no's. No, you want to short it. Yeah, a lot of no's. Please send me recorded. Yes, a recording will go out tomorrow to all of you who attended and registered. Linda says she just day trades it, not long term. Okay, good. So I think you all are clearly, your eyes are getting used to these charts now, and you're able to see you know, the trends and the way to read these charts. Okay, so that was Amazon. So here's the alert that Mark put out in his market insights back in late January. This is about 5 days before they reported. Just warning people to look at this as a buying a put opportunity on Amazon. And then this is a screenshot of, they reported after the close, the stock was down 11% or 73 points in after hours trading. So use these to your advantage, you know, like Harry did. He's up over $17,000 in 2 weeks, and he says we've changed his life. He's up over $17,000 just with his options trades on Google, Amazon, and Priceline. It's all from checking the power gauge rating. Chaikin Analytics is a godsend. I've been a subscriber for not even 2 weeks. You've changed my life. Harry, if you're on here now, tell us what's your latest trade or investment. So you always seem to pick winning. I think the last webinar I was on, you said you made $50,000 on something. So you know, we'd love to hear from you, Harry. Let Joe and Michelle know if you've had any recent successes. So let's review the 4 steps to profit from earnings. You know, you first want to know a stock's direction. That's by looking at the power gauge rating. You want to identify those classic bull and classic bear syndromes by the indicators that we went through. Identifying the time to buy as well as the time to sell is critical, and you can do that with the help of the overbought, oversold indicator, as well as those 6 pairs of buy and sell signals. And also to know whether you can anticipate whether a stock's going to beat or miss earnings, and that's being aided now by our earnings overlay screener. So I promised you in the beginning that in the next hour I would show you how to take advantage of volatility, and I hope you've all discovered how you can do that yourselves and profit, make profits. Think about where you want to spend that money of yours, and then start working towards that goal. But it is within your grasp. Certainly, you know, I always say I'm the poster child for Chaikin Analytics, because honestly, until I reached my 60s in 2012, I never had owned a stock. I never felt confident in owning stocks, and I just held mutual funds. And now my portfolio is really primarily in individual stocks, as I said earlier, 8 or 10 stocks, which makes it manageable for me to follow them and not be overwhelmed by information overload. So another happy subscriber is Rex. He followed the Amazon trade. It covered his next year's total cost of 2 months in Hawaii after taxes. My wife thanks you and I thank you, so that's awesome. One of the stocks I invested in 2014 was Southwest Air, and I had multiple positions in that, so I came out really nicely with that, and that paid for our 2 weeks in Turkey, which I thought was great. But you know, good for Rex. He's paying for 2 months in Hawaii, which is awesome. So we want you to be our next success story, and so we're going to make you a special offer for the Chaikin Analytics so that you can get on to your financial freedom fast track and start realizing these same types of profits. So as I said earlier, we've added the screener, and we've added options play, which we haven't really even touched on, you know, and now these earnings features as well. So there's a lot of functionality we've added to Chaikin, and our subscribers had suggested these additions, and we listened to our subscribers. So we've put them all in, and they are now in development for a power gauge rating on ETFs, because you all have asked us to do that. So one of our subscribers is writing to tell us how incredible Chaikin has become. It started great, but with the options and screener additions, I feel it's absolutely the best product on the market, and he's recommended it to all his investing friends. So we thank you, JD, for that. So what do you get with Chaikin Analytics? Well, it's a subscription for 1 year is $1,950. But bundled into that is options play, which is the options functionality. And Joe gives options webinars, teaching webinars to our subscribers twice a week to show them how to use options play to trade options. Many of you have done that, and you can see the testimonials from those that have. Power Suite, we call this our done-for-you research. These are research tools that we, again, haven't had time to go through on today's webinar, but they do incorporate Mark's weekly report, which we call Market Insights, with those stock ideas, including the ones like he did on FSLR and Amazon and Netflix. And I highlight the coaching calls because I think these are like so critical and such a huge asset for our subscribers. when you subscribe, Joe and Michelle will get you into the next day, if you're available, a small group coaching class where he'll walk you through the features and benefits of the platform so that you understand where the screener is, how to use the screener, where the options are, what it is, where the earnings overlays are. So you'll have that advantage of getting a very small group where you can ask questions and understand the functionality of the system. I also highlight the one-on-one because if you want a one-on-one session with one of our customer success managers to really understand how to use Chaikin with your particular methodology, they will set up a one-on-one hourly call with you, which I think is phenomenal. I'm not aware of any other financial services product that offers that types of customer service. And then we have these bi-weekly forums for our subscribers where we go through what's new. We explain the earnings overlay, for instance. We've just put in a sector performance capability, so that was explained on Monday and will be explained again in the next subscriber session. And in addition to that, if we were to roll these up into putting prices on these to buy these assets individually, the value would really come to over $7,600. Adding in, the screener, the new earnings feature, you get a daily report from our chief market investment strategist on what he sees happening in the market today based on what he saw last night and yesterday. And then this brand new, the sector performance view that I just alluded to, that just went in this week. All of these things are bundled into this subscription. But instead of charging $76,000 for it, we've created a price of $1,950 for the year. But we're offering our attendees a special price on that of $1,750 if you subscribe by Sunday, April 10th. But for those of you who want to take action now, you will be rewarded for taking action tonight by taking an additional $100 off and getting your annual subscription for $1,650. But you need to subscribe by tonight. So you've got the action items here, the phone number, our email, if you have questions, or just go online, chaikinanalytics.com/Sandy. The $300 discount will automatically be taken off. So I think we're just about 5 minutes over our time, Joe, and I know you and Michelle have been furiously answering questions along the way, which have been great. And I want to thank our audience and all our wonderful partners for making this available to their audiences as well. And thank you all for all of your engagement and replies. It really helps me know how to frame the conversation to meet your questions and what you're interested in hearing. So I hope by now you all have seen how phenomenal this platform can be, and that you start trading and investing it with Chaikin Analytics so that you'll be our next success story. So Joe, I'll turn it over to you to wrap it up.
Excellent. Well, great job, Sandy. Thank you so much for sharing all that with us. I'm seeing a few more questions coming through. Yes, this session has been recorded. So if you register for today's webinar, we will be sending you a copy of the recording so you can check out all the content and review everything that Sandy just taught us. It's a wonderful opportunity. Sandy's offer is for a 1-year access to Chaikin Analytics. So that payment would just be one time. This is the lowest that we typically go, about $1,650 for one full year. You can see the phone number available at the bottom of our screen, 877-697-6783. You can serve yourself also just by going right to chaikinanalytics.com/Sandy, and you can go ahead and punch that in. When you register, you'll have access to Chaikin within your first 5 minutes. So if you want to check out Chaikin Analytics tonight, we totally encourage you to do so. As Sandy mentioned, we'd love to have you join us for tomorrow's onboard session, where we'll show you the ropes, we'll show you the best practices. I know there were a lot of questions about how to use signals. I always go in depth regarding, how you can treat a signal, how that kind of interacts with our power gauge rating. So all those questions about signals, especially earnings and screeners, Michelle and I saw so many questions about that. We'd love to share that all with you tomorrow for our subscriber-only onboard session. So make sure to join us and take advantage of Sandy's deal tonight, available till midnight. But again, make sure to get us while we're still here. Go to chaikinanalytics.com/Sandy, and we'll love to see you on the subscriber onboard session tomorrow afternoon. So with that said, for Michelle and for Sandy, have a great afternoon, and we're looking forward to seeing you tomorrow for our onboard session. Thank you.